Crypto now leads traditional markets at major turning points because it is the most sensitive to shifts in global liquidity. Crypto has become the financial system's early warning signal. Bitcoin's price doesn't just respond to monetary policy shifts, it often anticipates them. Raoul Pal's research shows Bitcoin's price maintains a correlation above 0.8 with global liquidity indices, making it one of the most sensitive assets to changes in central bank policy. During the March 2020 crash, Cleveland Fed data shows Bitcoin bottomed 9 days before the S&P 500. When the Fed announced unlimited quantitative easing on March 23rd, Bitcoin had already rallied 30%. The same dynamic repeated in March 2023, as Bitcoin surged 40% ahead of the Fed's liquidity injection. Stablecoin flows offer another layer of insight. USD-backed stablecoins are the foundation of crypto market liquidity, and their supply expands when investors expect easier money. When credit conditions tighten, stablecoin supply contracts, often before traditional markets react. The IMF notes that declines in stablecoin supply frequently precede tighter credit conditions. In June 2022, for example, stablecoin supply shrank months before the S&P 500's next major decline. These flows aren't speculative noise, they reflect real-time shifts in risk appetite and liquidity expectations, with crypto exchanges requiring stablecoins to facilitate trades. The March 2023 banking crisis highlighted this signaling function. As regional banks faltered, Bitcoin broke out from $20,000 to $30,000, well ahead of the Fed's $300 billion balance sheet expansion. While many dismissed the move as speculative, institutional investors saw something different. Crypto markets priced in the policy response before it was announced. Bitcoin's rally wasn't in spite of the crisis. It was in anticipation of the inevitable central bank intervention. Crypto's predictive power comes from its structure. Unlike equities, crypto trades 24/7 across global venues. Information is absorbed and priced without delay. Participants include algorithmic traders and hedge funds from emerging markets, groups that are acutely sensitive to shifts in dollar liquidity. As a result, crypto markets move on policy expectations, not just on realized events. The ISM Manufacturing Index, a widely watched economic signal, typically trails Bitcoin's price action by about 8 months. This makes Bitcoin a leading indicator, not just of risk appetite, but of broader economic cycles.